Bitcoin is crashing, but these 30 indicators all say that Bitcoin is still in a bull market. Yes, 0 out of 30 indicators are showing that Bitcoin is going to be in a bear market. We're going to show you the 7 best indicators, and we're going to explain how they work. I think that's it.
All anyone can think about right now is price. If you're not mired in the esoteric knots versus core debate, which we're not touching,
Boring.
Especially if you stumbled on this video and you don't even know what I'm talking about, that's probably a good thing.
Yeah.
But Bitcoin has been puking over the last few weeks, and it's down today among mostly everything: equities, gold. The market in general is getting a kicking today on the worst jobs data in 22 years. I believe it was, I'll look up the exact figure. It was somewhere just above 100,000 jobs were lost last month.
And not including the government ones, because the government's shut down as of today, Thursday. So,
yeah.
Man. Well, okay. That said, Bitcoiners love to look at made up numbers to figure out if the price is going to go up or down in the future. And I do, I'm a little bit disparaging here, but it's useful to look at these numbers and these metrics because they help you kind of gauge the sentiment. And these are popular and they've been historically right. So it's probably one of the more useful things we can get to. The problem is, cycles rhyme. They do not repeat. So the most ironic thing would be for us to hit a bear market while all of these are flashing bull. Anyway, where do we get these? So I'm pulling up Coinglass, Coinglass bull market peak signals. I made a little video about this a couple months ago, but basically these are 30 indicators, each with a name, the Peull Multiple, Bitcoin dominance, Bitcoin macro oscillator, yada, yada, yada. And they basically track whether any of these indicators are showing that Bitcoin is near a cycle top. I assume everybody knows what that means, but basically Bitcoin is operated in adoption and price cycles. And so when is the top? That's the big question. So as I said, I'm not making this up. We're going to go through a few of these and explain and chat through them. I think maybe the first one to show is pretty simple and pretty interesting. This is the Bitcoin dominance chart. So for those who are not aware, there are other cryptocurrencies besides Bitcoin out there. And this is a chart that shows Bitcoin's market capitalization relative to the other cryptocurrencies that are out there. So if Bitcoin's market capitalization is 2 trillion and the sum of all the other cryptocurrencies is 2 trillion, Bitcoin has a 50% dominance of all other crypto networks. Currently, Bitcoin dominance is at 59%, so close to 60%. And that is slightly up actually from the, over the past, month. What's fun, Colin, is that this bull market peak indicators from Coinglass actually includes like a little, progress bar here. So if you're listening, there's a list of all the indicators and their names and some numbers, but then they have like a progress bar, 0 through 100%, which shows like how far, how close are we to the 100% indicator that indicator will start flashing. That is time for the peak bull market. So right now, none of these are, but the Bitcoin dominance is the one which is flashing close to an indicator. And that's because historically, whenever Bitcoin dominance hits 65%, remember it's 60% now, whenever Bitcoin dominance hits 65%, that has historically coincided with a cycle top. So Bitcoin being 60% right now, the magic number being 65% or over says that this is the closest indicator to Bitcoin flashing a bull market peak. So that's what this means. I think this is more of a return to mean than it is an indicator. Do you have a thought?
I wonder how useful these things are at this point is my question. Because the institutional, or let me back that up. Just the profile of a Bitcoin holder now is much different, and the kind of on-chain metrics that you might use to measure, an early adopter or someone who is actually taking custody of their own coins, moving them to and from exchanges, is quite different than someone who is buying into an ETF, right? Or who is buying through some other custodian. So I wonder how useful these metrics are. That being said, if Bitcoin does rip from here, then they'll kind of validate themselves in the sense that a 30% drawdown is not out of the realm of what's usual for a bull market for Bitcoin. I think a lot of people are shocked by it at this point because the downside and upside volatility has been dampened compared to prior cycles, given the ETFs and things of that nature. But, I was talking with Matt Kimmel before we were recording Mining Pod this morning for the roundup. And, Bitcoin at 100K, people freaking out. That's kind of bullish to me. I get it. If we drop below 100K, it's a huge psychological barrier. People are going to be disappointed, but I don't necessarily see it as a huge, I don't see it as a huge doomsday thing, right?
Yeah.
I think if we defend 100K after a few tests, that's going to be a huge signal that this is not necessarily over. I will say this much. It's another win for temper your expectations in a bull market. Everyone always has wildly inflated expectations of what Bitcoin's price is going to do during cycle frothy points. And this is a testament to that. But the biggest question rolling forward, obviously, and we've talked about it on this pod and the mining pod, a lot of people, including us, are bloviating on it. Do the ETFs, do the institutional players that we have now actually fundamentally change Bitcoin's cyclical nature? Does it actually change the market psychology? Do we have enough new actors to where they don't have that backward-looking view of expecting blow-off tops this quarter, right? I don't think we have a clear answer to that yet. I think intuitively it makes sense. But one point, and then I'll shut up, that Matt made that was really good before News Roundup. He made the point that like the institutions themselves, while they may be offering the products currently to retail, the institutions themselves have not really allocated into Bitcoin.
Yeah.
The ETFs represent, in retail investment, small family offices, hedge funds are trading it, right? But they don't hold assets long term. He made the argument that he was really bullish because he just sees incremental improvements to institutional access to Bitcoin. And these institutions move slowly. Eventually, we're going to hit a point in the coming years where they have full access. And once the actual institutions themselves start building small Bitcoin allocations, even small ones, it's going to be huge in terms of what that means for the demand. So I guess the point in all saying that is the factors that you have to think about in terms of gauging where the demand will be, how much on-chain demand there is or whatever. It's completely changed as we've seen these institutions move in, and as their ways to access Bitcoin continues to change day to day.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
And yeah, going back to on-chain, that gets us to the next interesting metric, which is the Bitcoin long-term holder supply. And this is actually, in my opinion, one of the short to medium-term things affecting Bitcoin's price. Because you said Bitcoin's over 100K, and that is the moon for a lot of people. That is well beyond the moon for a lot of folks who have been in Bitcoin for 10 plus years, who have been managing to stack and accumulate or hold on to their Bitcoin for a long time. We've seen the most Bitcoin selling of long-term holders in aggregate US dollar terms ever this year. I actually have this chart.
You got the checkmatey.
We've got
chart.
checkmatey. Yeah.
This is great.
I got to show my boy Checkmatey, who will be on the pod soon, I hope. $13.3 billion worth of coins aged 10 plus years have been sold in 2025. 16.2 billion from 7 to 10 year coins and 22 billion from 5 to 7 year. That's the people who've been holding for like 1 to 2 cycles. So for a total aggregate like sell of like the holders taking profit, that's what we can see on chain, $52 billion, which is up significantly from last year, at least for the older holders. That's a really interesting thing to see. And I'll show, going back to the long-term holder supply, the indicator here that's tracked on Coinglass, basically it says of the 21 million Bitcoin, whenever there's fewer than 13.5 million Bitcoin, which are classified as, quote, long-term holders, then that is an indicator that the holders have taken profit during the cycle. That's usually a good indicator that we have like really hit either a local or temporary top. That indicator of the percentage of 100% is at 89%. So it's the second highest indicator towards indicating that we are not in a bull market. But yeah, 0 out of 30 have flashed. I think this is probably one of the things driving the sell pressure right now, just because there's so many people who've been holding out for 100K because it was this impossibly high number, and now they want things in the real world. So we can see this there, and I think we're probably eating through and chewing through the glass to get those people and the holders swapped out. I want to move on to the next one. This is an old one, an oldie but a goodie, the Bitcoin Mayor Multiple from none other than Bitcoin OG Trace Mayer or Meyer, don't really know. And basically it is a multiple of the current price divided by the 200-day moving average of Bitcoin. And if it's over, equal to, or under 1, that indicates whether Bitcoin is overbought or oversold. And so basically Trace takes this view that Bitcoin has this 200-day moving average. And whenever Bitcoin's above it, it's a little bit overbought. And whenever it's below, it's a very clear buy signal. Right now, Bitcoin is right at the 200-day moving average is right at 1. So the Mayer multiple actually indicates that it is very perfectly valued at $101,000 as it is at the moment of recording right now. Now, this is an old metric. Like this metric goes back, I don't remember, Colin. I don't know if you remember, like 8-10 years. This is one of like the first on-chain metric.
I think at least 10 years. Yeah.
Yeah. So yeah, this indicator is an old one that has been kind of a tried and true mainstay for the market, and it's more just a tracker of momentum than it is like an absolute rule. I like to take a look at that. If we want to take a look at another OG on-chain metric, is the Peull multiple. Peull, P-U-E-L-L. This comes from David Peull, who is one of the kind of the OG originators of on-chain analysis from back in the day. And this is a measure of basically the Bitcoin miners' supply, how much they're selling and at what rate. Now, I think this is an old deprecated metric that doesn't really matter anymore, but it's a classic. It's been used a lot, and it takes a supply side approach to the Bitcoin economy. As the description here on Coinglass reads, the Peull multiple is calculated by dividing the daily issuance of value of coins in USD by the 365 moving the average of issuance value. So whenever we see the issuance of the sale of coins exceed the issuance, like that's usually an indicator that miners are selling their coins and taking profit. Again, an indicator of a cyclical high. Colin, you study Bitcoin miners. I feel like we have this conversation every other month for the past 5 years. what is your take on miners and sell pressure and how it might relate to the Peull multiple?
At this point, the supply coming in from new blocks is paltry compared to the outstanding liquidity from all of the mine supply at this point. I mean, what is Bitcoin? It's like 92%.
Yeah.
Is that how much Bitcoin?
92, 93.
It's when we're in the low 90s% at this point. So, this is the whole argument against stock to flow. Why stock to flow doesn't really make sense. It only makes sense if people hoard the thing, obviously. And as we've seen this year, they won't necessarily hoard it. If you're someone who started mining Bitcoin on your PC in 2011, and it's $100,000, every single person who's listening to this would take that liquidity. I mean, yeah, like whatever, fiat's dying, et cetera, billions of dollars though, you're in a club that very few people have ever been in, and you're not worried about money for the rest of your life or probably for the rest of your children's lives. And conceivably, if you play your cards right, the rest of your grandchildren and your great grandchildren's lives. So that's going to happen, right? I think the flip side of this though, Bitcoin absorbing $52.2 billion in liquidity just from those coin movements alone. That does not factor in all the other sell pressure that is taking place, in exchanges, right? And balances that are sitting on paper Bitcoin, things like that. So just that alone is an incredible thing, right? And not to mention, coins being moved from other durations. I think overall, that's the other thing about this. This is just a reason to be bullish again, that Bitcoin has absorbed a lot of this sell pressure. Yes, it has not had a 100x return or even more conservatively, quote unquote, for Bitcoiners. It hasn't had like a 5 to 10x return this year. We'll give you a break. It's up from $4,000 during the COVID shock in March of 2020. You had the opportunity for a month there to buy Bitcoin between $4,000 and $10,000.
Yeah.
And so, I mean, obviously not everyone was around to do that, but my point being, that's still an absolutely insane return. People saying, well, it's not an inflation hedge. Look at what happened since 2020.
Go listen to our last episode on gold.
Yeah. Even if you take kind of like, I think 10K, this is a tangent, but y'all are going to have to bear with me here. For a class of Bitcoiner that came in 2017 like me and then saw the crash down to 3K and then it ripped back up to just above 10K in the summer of 2019, only to dip back down, 10K was this barrier where we were always either just above it or just below it. And, the fact that you had, basically this weird kind of ceiling that we eventually broke through in 2020, we just even use that as a benchmark. The fact that Bitcoin's up 10x is just incredible. I think that people need to be a little more patient. And I also think that for our episode of gold last week, Bitcoiners do kind of need to take a hard look and think and be honest about where we're at, right? In the sense of the adoption of this asset. And it's not going to be the belle of the ball, or at least it's not going to be the maiden of the preppers who decide that the US dollar is getting destroyed, and it's not going to be the thing that nation states are adopting to hedge their UST exposure, at least not yet.
Yeah.
But the fact of the matter is it's performing amazingly well, and we should all be extremely happy with it at $100,000, right?
Yeah. Maybe we spent too much time talking about fiat and how inflation was bad, that we just naturally shoehorned Bitcoin into only the inflation hedge narrative. And maybe that's why we are a bit sniped, like a moth to the flame, about like that specific thing, and why we focus too closely on it, and why sometimes we keep having to pull our, foot out of our mouth and be like, well, okay, it's not like an inflation hedge like month to month. It's like long-term hedge against inflation. That's a different thing.
I think this kind of gets into, that's how inflation manifests, right? And it's not, you would expect it to be lagging to a certain extent. And gold's done the same thing. It's finally catching up. And the only reason that it is finally catching up is partly because central banks are buying it. But
this is the Pi Cycle Top Indicator. And the Pi Cycle Top Indicator has historically been effective in picking out the timing of market cycle highs within 3 days. It's actually kind of a hilarious. I think this is kind of a hilarious indicator because it takes what are seemingly two arbitrary numbers of moving averages. That is the 111-day moving average and the 350-day moving average. 350 divided by 111 is close to pi. It's like 3.153, which is close to 3.142. I think it was just kind of a catchy name. And I don't know like why this is so popular. It just kind of took the best fitted moving day averages for whether Bitcoin's going up on a short timeline and the long-term like advance of Bitcoin year to year and mapped them together somehow. And so I feel that this was warranted. Also, if we go back to the Coinglass page.
Can I pause for a second? It's really good, that chart, for just showing out how Bitcoin's volatility is smoothed out over time.
Yeah. This is a really good chart. Again, if you're listening, all of these are worth like looking at, which we show on our, on the video podcast, but also go to Coinglass, just for a good aggregator of all of these. And, I mean, a lot of people get really hung up on, I mean, if you were to zoom in on this, like this chart we've got is a long-term logarithmic advance of the adoption of a new technology. We call this technology Bitcoin. And all of a sudden, the drop from 126K down to 100,000 is not even small. It is completely indiscernible on the chart. You have to zoom in all the way to even kind of see where, like, kind of the indicator of the decline over the past 2 weeks here on the chart. So, and there's your 7 indicators explained. Bitcoin's still in a bull market. Bears can, you know what they can go to.
Bears can go freak themselves?
Yeah, one might say. So make sure to like and subscribe and check out the Blockspace podcast. We don't just talk about price, actually. We do talk about other things. We do technical stuff. We do real markets analysis. And then we do talk about interesting topics across the Bitcoin landscape. See you on the flip side.